button to say hello and tell us where you're dialing in from. I'm dialing in from New York City, New York, and great to have you here, and great to have our panelists here as well. So we will just wait a couple of minutes and then we will start our webinar. Hello, everybody joining us. We will just wait a couple of minutes and then we will start our webinar. And welcome and thank you for joining. Hello, everyone. We will just wait a minute or two to get other people to join, and then we will start our webinar, Hyperledger Foundation In-depth with Chainyard. Hello, everybody, and welcome to our Hyperledger Foundation In-depth webinar with Chainyard on finding business value in trust through blockchain. I would encourage everybody to use the chat button, say hello, and tell us where you're zooming in from. I'm zooming in from New York City, New York. And great to have everybody here, and welcome to our panelists, which I will introduce in a second. We are delighted to share with you this webinar. My name is Tomasz Sedej, and I'm an ecosystem manager at the Hyperledger Foundation. I will introduce our panelists in a moment, but first, let us go through our housekeeping rules. First, we would like to say that all are welcome in our community. Hyperledger is committed to create a safe and welcoming environment for everybody. So please follow our code of conduct when interacting with one another and talking to others in the community as well. You can find our code of conduct on our website and on our wiki. All Hyperledger Foundation member webinars are kept under the Linux Foundation antitrust policy, which you can also find on our wiki and on our events page. We're recording this webinar, and the recording will be available on the webinar library along with the slides. So if you miss anything, you're very welcome to go back and find the information you're looking for over there. This webinar is also being live streamed on YouTube, so welcome to anybody watching us there. So we encourage these webinars or our participants to stay very active and to get the most out of the webinars by participating. So feel free to raise your hand to get unmuted and to speak up. And of course, the more activity and participation we have, the better experience everybody will have and the more learning we will take away. Feel free to also use the Q&A box or use the chat button, and we will get to your questions after the presentation. If we do not manage to answer all of your questions, our panelists will also share their contact information at the end, so you can either ask them directly or go back to us, and we will make sure to transmit your questions to them. So without further ado, let me introduce Gary Storr, General Manager at Trust Your Supplier at Chainyard, and Murali Sapa, VP of Engineering at Chainyard. So Murali, great to have you here, and over to you.
Thank you, Tomasz, for giving me this opportunity. I may be stating the obvious if I say that trust is important for business. Right, as an individual or an organization, we'll be exchanging goods and services and transacting with other entities as part of the business. Or basically we are getting into a partnership or a relation with other entities or persons to do these exercises. So, but if we all know that trust is a cornerstone of any relationship, be it personal or business. So when it comes to the business, what do we mean by trust? Is it the integrity of the other entity? Is it the reliability? Or is it the confidence that we have on the ability of the other entity to keep their promise, their commitment? Are they creditworthy? So we get into all these kinds of discussions, right? We trust a person or an entity that we know all about. We know where they are located, right? And we also, in case of the business, we trust them only when we know that they have the ability to deliver with quality or pay the time for the resources that resources or the services that we have rendered. And also they have the right processes implemented, so there is no compromise, and the organization is not corrupt, financially stable. And we also look into who owns that organization and what is their personal reputation, right? When it comes to these kind of things, a digital identification with verifiable credentials will go a long way in establishing trust with that entity. We'll cover that also as part of this presentation in the second half. But when it comes to the trust itself, in the context of a business, I think it is multidimensional because it means various things for various industry verticals, right? And also various transactions that we are making. For instance, if you're buying medicine, what is the trust that it is not counterfeit? How do you trust that it is not a counterfeit? Or if you're procuring food, how do you trust that it is fresh and organic and not contaminated on the way to you? Or if you're buying diamonds or precious minerals, how do you know that it is not tainted by child labor or slavery and it is ethically sourced? So when we purchase goods, we trust when we know the origin, and we trust more if an audit trail is available and there is a trail of there is a record of the quality of the product that is assured, and a proof that it is not compromised during transit, right? Every transaction that we do, we trust only if we are guaranteed that it is secure, right? And when we share critical information like banking information or anything else, we want to make sure that it is secure. And all these transactions, we want them to be auditable. Their records are maintained and the information is accessible when and whenever we want them. So we want a transparency in the process of this business deal, right? And also we want that these are not altered, right? Most of these, if you look at whatever I'm talking about, they also form a part of the risk analysis of an organization, right? When you are trying to do a risk management, we'll be looking at all these things. In essence, trust, it defines a strong relationship between these entities, and also it talks about the risk that is involved. It is directly related, it's rather indirectly related to the risk. The more risk you identify in a process or in an entity, the less trust you'll be placing on that. So some of the blockchain features help us in identifying these issues, right? And that solving some of the problems that we talked about. So one of the main properties of the blockchain is the immutability, right? The data stored in a blockchain is immutable. It cannot be altered or deleted. And that's the main feature that makes the blockchain a permanent record keeping, unaltered network where every node has a copy of the digital ledger. And majority of the nodes, they have to consent to add any transaction, a transaction block to the ledger. So with this, we'll be looking at a corruption-free network and the decentralized nature of the blockchain, where a single entity is not the governing authority and no central actor is enabling the trust, helps us helps us in creating a resilient network, right, where there are less failures because there is no dependency on the humans, and it would be fault tolerant, and users have the control on the data, like all the data that is stored in the blockchain with proper permissions, you'll be able to access, and you are the owner of the data, and you'll be able to add the record, which will be validated by the other nodes in the system. So no third party is needed to maintain the SS that we record on the chain. So as a result, you don't have to depend on anybody. You own your data, and it's less prone to breakdowns because of the decentralized nature. Now you had to go, if you had to hack the system, right, it gets a little bit more expensive compared to regular hacking of a network, because you had to go and change the data in multiple locations. And the improved transparency that comes since every change is visible. And then we have the enhanced security and privacy. We all know that there is no reliance on the central authority, right? Everybody is a participant. So we know that we don't have to worry about somebody going and changing the data. And the data itself is encrypted end to end, which provides enhanced security. So all the blocks are hashed cryptographically, which prevents fraud and unauthorized activity. And anonymizing the personal data and controlling the permissions takes care of the privacy related issues. The information that is stored across a network of computers is less prone to hacking attacks. And then the most important property of the blockchain is that a blockchain is a form of a digital ledger, distributed ledger, right? This gives us the greater transparency because the transactions and data are recorded identically in multiple locations. All network participants with permission access, they have the same information. They can look at the information at the same time, and all the transactions are immutably recorded and time-stamped, which provides us an audit trail. And since the entire history is available, there is less fraud, or we eliminate fraud totally. And then the consensus algorithms that are part of decision making in the network is another advantage that helps us in getting active participation from all the nodes, and also keeping the decisions impartial. The other major advantage that blockchains bring us is the feature called smart contracts, which enables automation because we can now automate our transactions using the smart contracts. We can trigger the next step and based on the conditions that are met in the current data, and human interference can be totally eliminated. An example is an incidence. We'll just go back a little bit. Yeah. For example, in case of the insurance industry, with smart contracts, we can enable the payment, settlement and payment immediately based on the documents that are provided as part of the claim, right? And then there is an increased efficiency and speed that comes with this, because the manual processes are removed, no mediation, it is not error prone, and transactions can be completed faster and efficiently. So, and on top of it, we can store the documents along with the transaction record, eliminating the exchange of paper based information. And it also helps in reconciling the multiple ledgers, like in case if everybody has their own ledger and they had to reconcile the data, that would be slower, and we won't be able to clear or settle faster in such an environment. And then there is this instant traceability that we talk about with the blockchain because of the transparency that comes, and also the visibility to all the records that are stored. This would help in taking care of the environmental human rights issues, or counterfeiting and fraud related issues, right? And we had the proof that we can share with the customers. And most of the supply chain weaknesses, since we are tracking it throughout from source to the destination, we can identify and correct them and make the network much more resilient. And the enhanced security that we talked about earlier, and the greater transparency, the instant traceability, all this help in building the trust. So not only that trust, but we are also reducing the costs, increasing the speed and efficiency, and automating the processes. So these reduced overheads and elimination of middlemen, all this help us in reducing the paperwork and increasing the trust in the system, right? There's trust in the network, and also trust between various participants of the network. So they can engage in transactions without intermediaries. And there is also one more thing that we had to look at is when we are trying to do business, you wouldn't know everything about the other party. So now we have, with this information that is recorded and a proper audit trail that is provided, we will be able to work in a trustless network in a trusted fashion. That's the main advantage that we get. We'll go to the next slide. So these are some of the advantages per industry vertical. Like we can see at the bottom of this, we have the new business products or services. Since we are automating the processes and improving the time to market, most of the industrial verticals will be able to benefit from this. And a holistic view with the transparency to all and appropriate partners, that's another advantage across all the industries, right? And some of the industries which they need the increased security, like for instance, the communication and media or the food industry or insurance, etc., they also will benefit from adopting blockchain. Then the increased speed and efficiency in case of the incidents where we will be avoiding using the smart contracts, we'll be automating the processes and avoiding the manual processes. They also benefit a lot. Most of the high tech and healthcare firms that fall into this category. Likewise, the other advantages are shown here. We'll go to the next slide where we'll take a few of these industry verticals and see how they benefit. In case of the supply chain and food chain and the food chain industry, basically you have end-to-end visibility now, and the processes are streamlined. So a resilient and stronger supply chain network which can react faster to the disruptions. So in case if there is any problem like what is happening in Russia now or the COVID related issues, we'll be able to react faster and do better business, establishing the trust. So on top of it, we'll be able to ensure the safety, freshness, and reduce the wastage, or we can also trace to the source in the event of a contamination, which is quite possible in case of the food chain. In case of the banking and financial, again, the process modernization, right? Eliminating all the manual processes, automating the processes, or automatic record keeping, all these things would help in reducing the delays and increasing the operational efficiency. This can be applied across the industry in case of the banking and financial, be it the global trade or a consumer banking or clearance and settlement or trade finance or personal lending kind of a thing. Any of these things, they benefit tremendously using these blockchain technologies. And when we move to healthcare industries, now we can have an audit trail, and we can also have the records available about their quality, and the data is secure. That's one of the major advantages here, because a lot of personally identifiable information is involved. There is a lot of sensitive data related to the persons, right? So this data has to be kept secure, and blockchain with its enhanced encryption and security is an ideal platform to keep this information and share it in a secure fashion with other providers or researchers or payers and others, right? The same thing in case of the pharma, again, the audit trail helps us to fight the counterfeiting, and also in case if there is a recall, we will be able to instantly locate When it comes to the government vertical, again, we can work smarter and innovate faster, right? And again, the moment we talk about the data related to the citizens, a lot of privacy concerns will be there, and the data sharing with the agencies had to be streamlined. So we need an audit trail there, and we need the proper encryption and the safety security for the data. So blockchain helps there. And then the immutable audit trail would also help in the regulatory compliance, like in case if you want to maintain your contacts or check your certifications or make sure that the processes that are needed are all implemented. This helps in that. The insurance industry also benefits from the smart contracts. So the automation would reduce the paper intensive processes and increases the speed and effectiveness. So the reduced costs and verifiable data exchanges, these all help to reduce fraud and abuse. With that, I'll hand over to Gary.
Thank you, Murali. So I think Murali did a great job in setting the stage for what we're going to talk about over the next few minutes. And that's a product that our firm has brought to market called Trust Your Supplier. And as the name implies, this is a platform that allows organizations, typically enterprise organizations, to use the power of blockchain to identify trusted trading partners or suppliers in this case. So I'm going to talk a little bit about that and about how we've built a platform on blockchain that has operationalized this capability and is being used today in the enterprise space. So what is blockchain and what is the power of blockchain as it relates to identity? Because identity at the base of is at the very base of trust. To trust something, as Murali mentioned earlier, is really to understand the principles about that specific entity. And in our Trust Your Supplier solution, we are managing the life cycle of a relationship between trading partners. And so we have an identity management component within the network that allows organizations to look at that identity and determine what characteristics are important for them to continue to establish a relationship and then continue to using that relationship as they go forward in time. So the way that we've defined a supplier identity is it's a single record of a supplier's information. It's essentially information about the company, and it's owned by that company. In this case, that company is taking on the persona of a supplier. So it's firmographics, it's who they are, where they're located, who works for them, what's their financial picture look like, what kind of countries do they do business in, what is their policies around things like data rights and privacy, and are they a diverse supplier? Do they work in an area where health and safety is important? All of these things are part of their identity record. And our solution allows these attributes to be verified on the blockchain to imply the trust. And this identity can be consumable and resolvable. Trust Your Supplier today is an application platform, a SaaS tool. So it has a application on top of the blockchain platform. Going forward, this identity will be consumable universally as a singular identity or a digital wallet, if you want to think about it that way, in multiple platforms. And we're going to talk about that in a minute. But most importantly, what this really is, it's a single version of the truth. And it's what every organization wants to understand about the partners they're doing business with. Can they trust them? Are they going to represent risk? Are they compliant with my policies? How do I understand the ethics, the operations, and ultimately, how do I understand how that supplier is going to represent me in the marketplace? Okay, so we can go to the next one. So let's talk a little bit before we get to the details about how that's working today on the evolution of supplier management platforms, because it's very important to understand how we've got to this point in time. Trust has always been a very important factor in any relationship since the very beginning of time. I think that's obvious. For many years, until 1983, really, when McKinsey published a white paper outlining what at the time were considered to be standards that enterprise organizations should adhere to with regard to their supplier base, trust was largely a handshake relationship. So two organizations doing business together essentially had a way that they self-defined that would imply their business relationship. And there was not a lot of documentation. There certainly wasn't the concept of an identity. It was highly decentralized, and there was really no way to replicate it, right? So that's how we did business for literally thousands of years. And then in the late 80s and into the 90s, we started to get tools and networks that were able to move information over some form of, kind of standardized platform where organizations could trade information. That first started, of course, with email, right? So email became prevalent in the 80s and into the 90s. And so now organizations could email information about themselves back and forth. So that drove some level of corporate standards because organizations wanted to understand how their suppliers were being onboarded, were being vetted, were being paid, things of that nature. So emails and the inevitable attached spreadsheets were used to kind of try to gather that information, but it was still very informal. Obviously, there wasn't a lot of data security at that time. Most email was unencrypted in that time period, is highly subject to the human error element because information was keyed in by various points of input along the life cycle. And it was this extraordinarily heavy administrative burden on both sides. Now, strangely enough, the email spreadsheet methodology still exists today in some organizations. I was actually at a call this morning where they described their process as consisting of emails and spreadsheets. So something that was probably been around for 30 years hadn't gone away. The industry did start to move, though, and this is more recently with the advent of cloud computing. So, looking at maybe like the last 10 years, corporate web portals have started to emerge to more effectively collect information. So these web portals are typically encrypted and they offer better security on information as it's traded. So the concept of an identity is starting to take form here in these web portals, but it's very siloed because each individual or enterprise organization has their own portal. And so as a result, all of that supplier information in that organizational portal is isolated to that particular digital structure within the corporation. So if I'm a supplier and I provide customer A information on their web portal, I've got to turn around and do the very same thing on customer B, C, D, and so on and so forth. So it's the same work over and over again. Still highly burdensome from an administration perspective, still very difficult to maintain. Some standards are there, the security is a little bit better, but this is what Gartner refers to as portal fatigue on the part of suppliers because they're asked to do this so often with their corporate partners. And so what we're starting to see today, and we're kind of in the middle today between the corporate web portal life cycle, which we hope is coming to an end, and the advent of enterprise supplier networks. So, if you look at the landscape today, there's been kind of a temporal shift in going to a network-based solution, and a network-based solution offers a number of advantages. Number one, supplier data now becomes can become proliferated across many different trading partners if you're a supplier. So many of your customers can get the exact same information proliferated across the network. So it kind of works like LinkedIn. You need to create one profile, you share it with many. So the reliability of supplier information is greater simply because it's the same information. It's not rekeyed in over and over again. Suppliers are now resident on a network that now can be identified and discovered. And so now we're starting to see identity truly being established because the information, the profile, the firmographic, the surveys, the questionnaires, the document shares, all of that content that's being provided by suppliers in this environment today is part of an identity record on that particular network. And then there's a new concept that is in the picture where third-party verifiers, these are authoritative sources of a particular discipline, such as financial health, ESG, it could be diversity, it could be risk, it could be adverse media, names such as Dun & Bradstreet or EcoVadis, names that are well known, are integrating to these networks to provide their commentary, their scoring, their ratings, and their content related to suppliers. Trust Your Supplier, our platform, falls into this lane today. We are an enterprise supplier network, and we provide all of these services. But we don't think that's the end state. We think the end state is a true supplier digital identity, where a supplier will have a set of those trusted credentials, and those credentials can be in any number of forms. They all contain some basic set of information. And then depending on the industry or the geography or other aspects of that supplier, they can then add information to that list of credentials to bolster their identity. This allows near instantaneous qualification of a supplier because this information is provided by the supplier. It's going to be on a blockchain platform. It's going to be resolvable by multiple platforms, and the information in there can be immediately trusted, which is key. So this saves a tremendous amount of time, effort, and cost on behalf of the enterprise, simply because they do not have to go through manual exercises and elongated cycle times to qualify their new trading partners or recertify their existing certifiers. This can be done from an industry consortium perspective. It can also be done horizontally across many different industries. So really what we're talking about is an evolutionary life cycle in which we're moving into a network phase today, but there's also a quantum leap at hand in moving to a true supplier digital identity by leveraging the technology of blockchain that can be universally resolved and deployed in an enterprise space and provide what we talked about a minute ago, and that's that single version of truth. Okay, so we can go to the next one. And I'll talk a little bit more about what really is a digital identity, right? So a digital identity in any form, whether it's you and I as individuals, a corporation, anything that we want to associate identification with has to have certain characteristics. Those credentials need to be assured. We need some way to determine that those credentials are assured and trusted and uncompromised. There has to be consent. So there's the data needs to be provided by an owner, and that owner then needs to agree to share that information, to provide consent that information can then be viewed. So if you want to think about a digital wallet, right? A digital wallet, just like the wallets that we carry around and have for our entire lifetimes, have pieces of identification in that. We don't share the entirety of our wallets with anyone that asks. When we go get on an airplane, we may share a driver's license or a passport, but we don't share a credit card, even though that's in our wallet. So there's a level of consent, and then there's a level of sharing that in this case, the supplier, but the owner of the identity then chooses to share. Of course, there needs to be infrastructure. That's blockchain, and that underlying infrastructure architecturally needs to be trustworthy. And we believe blockchain obviously plays that role today. The supplier needs to be, or the identifying party needs to be real. They need to have an identity. They need to be who they say they are, and that needs to be trusted. This needs to mitigate the whole aspect of counterfeiting. Marilyn gave the example earlier of, perhaps, you have, I think the example was around the medical industry and counterfeit there. Maybe a more popular example of late we've heard in the news is, some luxury items like handbags have been heavily counterfeited, and having those verified is very important. So we need attributes that can be verified by reputable bodies. Typically, these bodies sit outside of the carrier or the owner of the identity. So there's a third-party verification or authentication of that particular identity. Okay. So we go to the next one. Now, so now the question becomes, if we can just go back one. So now the question becomes, okay, what do we do with that? Okay, we've established this identity. We've seen how it goes through this evolutionary life cycle. And how can this be used in our use case with the enterprise, right? So this digital identity, it has to be shareable and resolvable. And it needs to be something that can be used globally. We say we want this to be used the world over. And it needs to be used in any consumer of the information. So if that identity has been established properly, that identity then can be consumed and resolved by on your mobile device, within your SAP ERP platform, within other ecosystems that exist out there today, of which there are many, perhaps even other blockchain network. The whole concept of network of networks is really just emerging, and we don't really have that concept really that's behaving and offering capabilities to the enterprise today. But that's coming. We understand that. Of course, there's a multitude of legacy systems that will want to be able to share that information with, et cetera. So this information that establishes the identity then needs to be consumed by all of these types of platforms, all of the different various receiving systems that can make use of that identity for purposes of decision-making, for driving payments, for driving other aspects of the relationship, deliveries, and other aspects of enterprise business. And the important element of this is this all allows us to work by a certain set of rules and standards that really bring all of that efficiency and trust to bear. I know the information, it's predictable, I know where to find it, I know how to resolve it, and I trust it so I can take immediate action on it with minimal to no due diligence. Okay, and now we can go to the next one. So here's what Trust Your Supplier looks like today. So I mentioned on the earlier chart, we are on the journey towards a true digital identity. I wish I was here to tell you that we were making that quantum leap over the network. We didn't quite do that. There's still some limitations in the marketplace that both from a technical commercial perspective that really necessitate going through and into and traversing that network step. And I think that network will be with us for some time. But ultimately, we want to have that resolvable digital identity. And today, in our Trust Your Supplier platform, we already have the firmographics, the questionnaires, and these verifiable third parties and their associated content embedded in the supplier record. So if you log in this TYS today, you'll see suppliers that have all of these characteristics and attributes attached to their record and owned by them. It's a sovereign record owned by the supplier. That exists today and has for a couple of years now in our product. The supplier can choose, as I mentioned earlier, they can choose with whom they share that identity. There may be a customer that they choose not to share identity with. They own the information, and therefore they choose with whom that they will share that content. And it's all today in TYS, it's all on blockchain, right? So as we mentioned before, so that ensures that high level of trust and integrity. I talked about it a minute ago on the previous slide, how the underlying infrastructure is very important as it relates to ensuring that that data can be trusted, it's tamper-proof, it's immutable, and that it has those characteristics that allow me to use that information in a highly trusted manner. Now, as we go forward, and this is the quantum leap element, right? So we want to have that true self-sovereign identity that's truly decentralized, highly portable, globally resolvable, and then cryptographically verifiable. All of these aspects are being developed as part of our platform and will be available as we go into next year. Some of these are partially available today, and will all be aggregated into what we're referring to as a TYS decentralized identifier that can be consumed in any of those ecosystem platforms that we talked about on the previous slide. So a supplier will be able to take their identity and then their digital wallet, if you will, and take a piece of information, a portion, a subset of that identity out of their digital wallet and provide it digitally on the blockchain platform to any other entity that wishes to consume that, resolve that, and make use of it. So we're really excited about that because that's going to give that supplier that single trusted identity that can be consumable by any of these kind of external environments. Okay. And so, you know, Morali, did you want to go? You want me to do this one, or do you want to do this one? I'll do this one. So we talk about.
Sorry, I was on mute. You can go ahead and do.
Oh, okay, awesome. We kind of got our wires crossed here. Sorry, guys. So just in terms of hype. So there's been a lot of discussion about blockchain, obviously over the course of the last number of years. A lot of it centered around cryptocurrencies. That's where blockchain typically makes the news, as we all know, right? But that's really a myth, right? There's a blockchain for the enterprise. I think that's why everybody's here today, right? And there's a number of cryptocurrencies, but there's a number of other blockchain technologies, like the one that we're talking about here today, that really has little to do, at least at the moment, with any kind of crypto-based economy. Okay. Now, blockchain is the way we look at it is blockchain is a tool, right? Just as any other technology component is a tool. That doesn't mean it's better than traditional databases. It doesn't mean it's going to replace traditional databases. It has advantages as it relates to the things we talked about identity and trust and immutability and decentralization. Okay, so that does not mean that all of the relational databases that exist around the world are going to simply evaporate. That's of course not the case, but rather that blockchain has a very specific use case, one of which we've been talking about here today, right? So in terms of immutable, tamper-proof, I know that there's been some quantum computing that have been recently released, and so there's been discussion about could that quantum technology actually tamper with something even as sophisticated as blockchain? Yeah, perhaps. I guess that's to be seen. Obviously, technology moves forward as technology changes. There's ways that we react to it in the industry, right? But really, I think the risk on blockchain is in the consensus, right? And so as it says here, if more than 50% of the network computing power is controlled by entities that wish to kind of conspire, yeah, obviously it could be tamper-proof. So the point here is that the structure, the governance, if you will, of the blockchain is just as important as the technology, right? So that those kinds of things can be avoided, right? And so because the blockchain doesn't always operate in a vacuum, their data structures share information And so when that information is shared, of course, that information may be less than 100% secure. And so, good secure data practices always must be followed when a blockchain system is introduced, because a blockchain system is almost never holistically blockchain. It's just the nature of the technology. And I think any platform we've ever seen makes use of more traditional or probably more tried and true technology as part of the whole architectural foundation. Okay. And so, finally, is it a truth machine? No, blockchain is simply a technology, right? There needs to be, governance and process and other elements that layer with the blockchain solution to ensure that that solution, whatever it might be, in this case, it's Trust Your Supplier, actually provides the truth or the trust or the reliance in information. Okay. And I think we are ready for questions. Before I forget, these QR codes can be scanned. So if you've got a smartphone and you would like to get a hold of Morale or myself with follow-up, or you're just would like to offer something or just want to get a hold of us, feel free to do that. It's our digital business card. So, but I think at this time we're going to start taking some questions.
Thank you very much, Morale and Gary. Very informative and a lot of information. I really enjoyed your presentation. So we do have one question from a viewer from YouTube, from Arya Shiva, and he's asking how to implement real-time tracking system using blockchain technology.
Right. It's not just blockchain that would enable it. You need, it really depends on what we are tracking. If it is goods and other things, then IoT plus blockchain is a candidate technology to solve that kind of a scenario.
Mm-hmm. Thank you very much, Morale. Are there any other questions? Please feel free to raise your hand or just type the question in the Q&A box. Okay, if there are no questions from our audience, I think we will wrap it up. We're almost at the top of the hour. And feel free also to use the QR codes which Gary and Morale shared, so you can also contact them directly and ask them about any questions you may have. And the audience also saying thank you. Then it was a great learning experience. I can only agree with them. Thank you so much to our panelists. It was a really insightful presentation, and it covered a lot of information. So before we wrap this up, I would just like to invite you to use also our Discord channel, which I will check in a moment. So please follow us on Discord. We have an active Discord community here at the Hyperledger, so please join it and you can continue all your questions here. And you can also see how to participate and contribute to the projects as well. Here you can find information on the projects, on working groups, on special interest groups, regional chapters, and much more. In the future events, Hyperledger will be present in Davos at the World Economic Forum from May 22nd to May 26th, and you are welcome to register for free for the Why Open Source for Financial Services, Digital Assets, and CBDCs session. You're also welcome to visit our Hyperledger events to get more information about the events. Last but not least, Hyperledger Global Forum is happening September 12th to 14th in Dublin, Ireland. So please register, or the sponsorship prospectus is also available. It will be a great opportunity to meet each other in person, and we look forward to seeing you live in Dublin. Thank you very much for watching, and thank you again to our panelists, Murali and Gary, for sharing all of these great information. If you have any questions, feel free to email us at membership@hyperledger.org, or just join our Discord and continue your questions there. Thank you so much for watching, everybody.